Hello, friends, and welcome once again. This is CA Rajiv Khatlawala, author of How to Profit from Technical Analysis. And today, in this video, it will be a different video today. In this video, what I have tried is I have tried to analyze on a techno-fundamental basis, in fact, more of a fundamental basis, the top investment of the big bull. So I am sure all of you are aware who the big bull is. So let us try to understand the top investment of the big bull, famous company, Titan Company Limited. And the one of the major shareholders of this stock, this company is the big bull. And we will see as to in this entire video I am going to try to understand the mind of the big bull, of the reason why he invested in this particular stock and has remained invested for the last so many years. Also, we'll be trying to do the evaluation only based on quantitative analysis, so based on figures, and of course, there would be many qualitative aspects about the company which probably is not discussed here. Normally, those of you who are aware of techno-fundamental analysis would be aware that any analysis, any investment decision is not only based on quantitative analysis, that is on figures, qualitative factors in the company where to which gives a higher valuation or a higher valuation price to the company. So on this background, friends, let us try to evaluate the stock Titan company, and let us try to understand whether this stock is worth investing even at these prices. So I will just share my screen, and those of you who have seen my videos, I would request all of videos with your friends, as well as not only you can share the videos, but please tell your friends to subscribe to this channel, and also if you have liked the videos, you should hit the like button also. Do comment on these videos which I upload, because many a times I receive personal messages on my WhatsApp that the video was good, but you should write these comments on the video, on this video itself, below this video itself, in the comment section. So friends, let us try to understand now the Titan Company Limited. What are the basic fundamentals of the stock, and technically broad technicals. I'll not go deep into the technicals in this video, but I'll be more concentrating on the fundamental fact. Now, just before I start the fundamental data, let us see the broad chart of this stock. So this is the 5-year chart now in front of you. As you can observe, Titan Company, right from 2017, or in fact, November 2016, the stock was quoting at around 303 levels. From there is a consistent higher high, high low formation. Even in the COVID crash, it did fall. It did give a good correction, almost up till 800 levels from a high of almost 1300. It fell to 800, and thereafter again it has rebounded. And right now we are at almost 70 plus levels. So in the last 5 years, we can say the stock has risen from almost 300 levels to 1700 levels, almost a 6 times jump in the stock price. Also, what you're observing on your screen is the 200 days moving average, and as you can see, most of the times the stock has remained above the 200 days moving average, suggesting that the long-term investors in this stock are bullish on the long-term prospects of this script. So This is the brief technicals. I would not go much into technicals in this video. Now let us try to understand the basic fundamentals of this stock. Now this company, Titan company, has a market capitalization of around 1.5 lakh crores. Now this is a huge market capitalization. Why do I say it's a huge market capitalization? The reason is that the sales, that is the turnover of this company, even as of March 2021, the turnover of the company is around 21,000 crores, and compared to 21,000 crores of sales, you have a market capitalization. The equity value of the company is almost 1,50,000 crores. Now this is a huge market cap to sales ratio. It is almost 7 times. You would have observed here, the market cap to sales ratio is around 7 times. Now for any typical company, this normally is around 3 times or 3.5 times. This is almost 7 times. That is, there is some element of premium which the market is giving this stock. So the stock has a market value, market capitalization of 1.5 lakh crores. The current price, as I said, is around 1750. Now I will be evaluating, I will be understanding this fundamental data, the basic fundamental data. It is not a detailed calculation, detailed DCF calculation. No, it is a basic fundamental data as an investor, as a normal investor, how I will view this particular stock. How I will view the growth of this company, and my investment if I have done, how will I view that in relation to the growth of the company. So I have taken broadly 5 parameters. So one is the sales and the sales growth. Second is the profit and the profit growth. Third is the debt, that is whether there is any borrowings or not. Also, I have taken the operating margins, etc., and the return on equity. Now, these are the 5 parameters broadly which I have taken. So let us try to understand each parameters. Now, first parameter is sales. So for any company, the growth in the sales, the growth in the top line is very important, is probably the most important, because profits may fluctuate because of various economic reasons or economic activities, or economic reasons like COVID, etc. But the top line is something which is very important, and it suggests the overall growth of the company. So now, in the last, if we can say, if in the last few years, right from 2016, if we see, the sales of this company has risen from 11,000 crores to the current levels of around 21,000 crores. So it has almost doubled in the last 4-5 years. But if I see the growth rate, here we are seeing, I'm using the screener.in website to get the basic data here. So the 5 years compounded sales growth is mentioned here as, or it is calculated here as 14%. So which is a comfortable sales growth as, but I would like to add here, friends, that I did some calculations on the screener.in itself. There is a facility, you can create your own scanning screens, filters, etc. So what I also found that there are, apart from Titan company, there are 181 companies which are having sales growth 5 years profit sale, 5 years sales growth as high as 40% or more than that. So this is nothing unique. Therefore, as far as Titan company is concerned, sales growth of 14%, we will consider that as a normal growth. It is not a super normal growth in the sales. Even if you see the 10-year sales growth, it is around 13%. Now, so the sales, as far as sales is concerned, the growth rate is, we can say, average sales growth. Now, let us see the profit growth. So, but before I go to the profit growth, but before that, I would like to add here that this stock has a operating margin. Now, when I say operating margin, it means that the sales less the operating profits. The operating margins of the company has been more or less steady. Only there it is down in the last 1 year, that is 2021, probably because of the COVID situation. But on an average, the operating margins is in the range of 9 to 10%. Now, for a manufacturing company, a 10% operating margin is not at all very huge. It is a okay. I mean, it is a average operating margins. We have so many. We would have many companies which are having operating margins much higher than this. Because if the operating margins are around 10%, obviously the net margins will be much lower than the operating margin. So, this is one aspect which any fundamental investor will also look for. So, operating margins, if they are thin, then there is, of course, a risk involved, because fluctuation in the sales and profits due to any reason, it might affect the fundamentals or the profits of the company. So 10%, average 10% operating margin is also we will consider as an average operating margin. Now let us come to the profit part. So let us see the profit figures here. So as you can observe, profit after tax, this is the figure here, net profit. Now in case of net profit, almost in 15 16 levels, 800 crores was the profit. And from there, in till March 2020, that is last year, there was a growth of around, the profits were around 1500 crores. But in the 2021, the recently ended year, it is around 973 crores. So as far as the profits is concerned, I'll just go scroll down and you can see this here. The 5 years compounded profit growth is also around 7%. Now, they're all very high growth rate at all. Even if we consider the March 21 as a 2021 as a odd year, where many of the companies had a lot of problems, of course, because of the situation. But even there, I did one analysis here, one screening I carried out, and what I found was companies having 7% or more 5 years profit growth. So many companies are there. So I got this figure. 523 companies are there in this, which are having the sales, profit growth of more than 7%. So again, on the profit front and the profit growth fund, I would say that it is an average or probably below average growth as far as Titan is concerned, because there it is not unique. There are so many 500 plus companies which are having some similar profit growth. So that is the third criteria, if you can say so. Now let me go to one more interesting aspect. Now most of the fundamental investors will always look for the two things. One is the profit and profit growth, but they will also look at the leverage, and that is the debt portion. So what is the debt compared to the previous years? Has the debt reduced or has the debt increased? Because most of the fundamental investors whom I have they seem to be liking zero debt or very low debt companies. So now let us see here in case of Titan, the balance sheet I have opened up here. Now what you're observing is this is the borrowings part here. Almost it was a zero debt company in 2013. As you can observe, in 2013 it was a zero debt company. In March 2014, there was a debt of around 800 crores. After that, there was not much of a debt. In 2017, you have a 1800 crore debt. From there, the debt has more or less steadily increased, and as of March 2021, we are having a 5,600 crore of debt. Now, this is a large, the debt of the company, the borrowings of the company is rising actually. Normally, as I said, fundamental investors are more comfortable if the debt of any company is falling. In this case, the debt in the last 5 years, the debt of the company, the borrowings of the company has risen from around 1800 crores to 5600 crores. And if you see the net worth of the company, that is the shareholders funds, is approximately 7500 crores. So against 7500 crores, the borrowings now stand at around 5600 crores. So on the debt front, again, I would say that if I have to take on a priority this thing, that I would not be much comfortable here as far as Titan company is concerned, because had it shown indications of lowering the debt over the years, it would have been a much better thing for much comfortable thing for the investor. So on the debt front also, we are seeing a higher leverage now compared to the previous years. And one impact, those of you who are aware of the plans, is one major impact of higher debt would be that it will directly affect the return on capital employed. The return figures will go down because of the huge debt and therefore the huge interest element. And now let me check on the return on equity figures. So if I go back to my original screen here, what we observe is in the return on equity, that is the return on shareholders funds, is around 13% or 14%, 13.7, so 14%. So the company is earning comfortably higher returns for the shareholders. The profits of the company are on the invested capital by the investors, that is 7500 crores. It is earning around 14% good returns, but not phenomenal returns. Now, of course, this ROE is as of March 2021, and if I go back in time in 2020 and 2019, this figure was much higher. It was at around 21%, so that was a comfortable ROE figure. But I'm assuming that two things would have affected the ROE in 2021. From 20%, it has fallen to 14%. Two reasons: one is the lower profitability, and second, and probably more important, is the higher amount of debt that the company has taken, 5600 crores of debt. So that is the reason the return on equity has fallen. So now we have to sort of evaluate what is the whether I should be investing in this sort of a company or not. Now, if I go just by the figures, as I said, there's only quantitative analysis. If I just go by the figures, then I will not be much excited. Probably the Big Bull and the other investor company are probably seeing something more. They are aware of something more apart from the figures, which we are not aware. Let me give you some basic valuation parameters here. So, one valuation parameter is the stock's PE multiple. So, the stock is quoting right now at a PE multiple of 160. Now, this is huge. I just did one more calculation, very interesting calculation I did here. I tried to search how many companies in Indian stock listed companies are there which are having sales growth of 14% or more, profit growth of 7% or more, and if they are having a PE multiple of more than 150 times. Now, obviously, there were only two companies. One is Titan Company, another is Avenue Supermarkets. So there are only two companies which are falling in these three categories. three criteria. So of course, 160 times PE multiple is huge. You are paying a very high price, a very huge premium for the growth. But as I said, the growth doesn't seem to be visible here. Because a 14% growth company, there would be more than 181 companies which are giving similar growth rates. So there is nothing specific about this company. But as I said, the brand, the other qualitative factors, the management, etc., probably there is a premium to this. Whether as an investor, I would pay such a high price for these qualitative factors. That is, of course, an individual perspective. I may think no, you may think yes, it's possible. Now, let me go through another valuation parameter. Market cap to sales ratio, as I said, around 7 times, which is huge again. Normally, it is somewhere between the range of 3.5 times. EV EBITDA. Now, the enterprise value to the EBITDA is also a multiple which many people see. And, as a thumb rule across the world, if we see, the thumb rule is that anything beyond times is overvaluation. Now, of course, it is not a thumb, it is not a straight jacket thumb rule, but I would say that there are many companies which may have EV EBITDA of 20, 25, and it is justified also because they may have that sort of a EBITDA growth rate and the EBITDA margins. So, but here we are seeing 84 times, which is very, very huge. So it is a huge premium an investor today might be paying. If I invest today at around 1700, paying through my noses, if we can say so. Similarly, there are various other parameters, but I think the more or less, what I have tried to cover are the key parameters which generally an investor like us, a normal investor like us, will want to analyze before investing in any company. This is a preliminary analysis, as I said, preliminary data which we can see for any stock we are investing in. So, of course, I'm sure that the big bull and the other investors would have seen many things in this company which tempted them. So if you see the investors list, there is this facility is given in the screener.in. What we can observe is the big bull and the big bull family has been investing or has remained invested in this company for a long time. The stake of this family is around almost 6 to 7%, almost for the last 10 years. Though right now it is around around 5%, but the stake was around 7%. Slowly and steadily, probably it has fallen, and right now we are, the stake of the company, the stake of the big bull and the family in this company is around 5%. So it's a huge stake as such, and I'm sure that this broad quantitative analysis has helped you to understand what are the factors that fundamental analysts will try to understand from for a company. And also, friends, I am repeating here once again that this is only a quantitative analysis. It is by no way it is I'm considering all the factors here. And with this, I think I will stop the presentation, and I hope you have liked this session, this particular video. If yes, please do like the video and give your comments. What is your thinking? What is your thinking about this particular company? What are other factors which probably you want to see, or probably something which I have missed? If there are certain factors, interaction on this, and you can write your comments in the comment box. Thank you very much and have a nice time. Thank you.